It's Brian back again, 2 days in a row. What's up with that? Hey, just doing a quick update. Want to bring you up to speed on where we are today. Coming into the new market session, we've got. I guess we'll be getting rolling here in about 23 minutes is when the live trading hours will actually kick off and go underway. So I've got some time to do a little bit of homework leading up to that, see what's going on in the market, and then give ourselves opportunity to make some quick trading decisions. So what is going on for the day? First things first, just to let you know, let me pop over here. Had some news this morning, which was the CPI, core CPI reports came out. We do have a little bit more action coming up a little bit later today as we review the budget balance and the bond auction. It'll be interesting to see what this does overall to the markets. Coming into the new session on the CPI data, we saw, big pullback, but, it came back to pretty consistent levels that we've seen tested and retested before. And prior to the new session beginning, we've got market bouncing back a little bit here. Now, what'll be interesting with this, looking over here at the starting with the S&P, is we can see the pullback that happened here. We're in a long bias. The 4-hour bias is long. The 30-minute bias is long as well. Before I get into this, yesterday we did have a trade that ended up being able to be put on for us. We had lower high, lower low here, and actually here rather, lower high, lower low, lower high, lower low. And market did break out and ultimately moved on, but without us, we came back. If I can make this bigger, came back and it stopped us out almost to the tick right here, and then moved on. Obviously, significantly less of a loss than we were prepared to take. We're let me see what that actually was. I want to say it was like 2 points. Yeah, it was a 2-point loss versus the initial risk, which was about 6 points of risk on there. So significantly less than we were prepared to take, which is always good, but always a little bit frustrating as well when the market moves on without you. But neither here nor there. That's just part of it, guys. I've mentioned that time and time again that we're not going to win every trade. There's going to be times like this when you get a trade opportunity. It might come back, take us out, and then move on without us. It can be frustrating, but it's part of the game. You're not going to win every trade. Trade management and just really overall money management is what makes things successful over the long term. We have to give ourselves the opportunity to win more than we lose, and look at that mathematical process over the greater period. So anyway, I don't want to go down a rabbit hole on that. Leading into today, we've got 4-hour bias is long, as we can see here. 30-minute bias, despite this pullback, obviously is still long. There's a lot of history here that we're looking at that's been pushing up. So anyway, what are we looking at coming into the new session? That'll start here at 9:30, 8:30 U.S. East, 8:30 Central Time. What we're watching for is to see kind of where this closes and then what happens after that. What we'll be waiting for is nothing different than we do every single day, which is we'll look to see, we made a lower high and a lower low. This is certainly a lower high and a lower low than that previous candle. As the new session begins, we'll be watching to see what happens if we can break above this lower high right here and continue back in the direction of the trend. If it continues moving down, if it sells off after the new session begins, then we'll keep watching for potential breakouts back in the direction of the current market bias, which is long. We'll look to see if we get some action back in the direction of that, in that long direction, but not trying to front run it or guess or, call the absolute bottom. We want to let the market call that for us. We want to let the market move on. So if the new session opens and it starts moving down, let it go. Don't chase it. Don't try to jump in front of it. Just let it go, and you can trail your entries at the tops of those previously closed candles. And then if the market does, decide it's going to bounce back and return back into that normal bias that it's been on, then you'll have a fairly safe entry. But again, a lot of folks see a big red candle like this after, a whole bunch of green, and they want to try to jump in, quote, at the bottom. They want to try to call that bottom and jump in. It's dangerous. I mean, sure, if you've got some key levels, there's I guess there's different ways of looking at it, right? If you've got some key levels that you're watching and you've had them marked and you're aware of what that pullback might be to this bottom edge of a certain channel and you want to play that, that's fine. A lot of folks don't actually do that level of thought. They see the big red candle, they either A, want to get in chasing it down. Oh my gosh, the market's selling off, I'm not in it. And they'll start chasing it, trying to get that entry short, and then get stopped out as it pulls back. Or they keep trying to call the bottom and jump in the face of this momentum without doing the research in advance of identifying that bottom edge that they could potentially trade from. I don't have anything against, support resistance trading at all. I think it's great, and I love, looking at top edge, bottom edge, and making your trade decisions from there. But you've got to do it before the market begins, and you've got to do it before your emotion sets in. When you've got a big red candle like we saw just now over here, when you've got a big red candle like, I'm pointing, you can't see me pointing. When you got a big red candle like this, emotion sets in, and that's where you go, oh my gosh, I think we're at the bottom. I'm just gonna buy it. Well, that's dangerous because you don't know when that momentum is going to end. So anyway, don't let your emotions set in. If you are playing channel edges, look at it on a 4-hour, look at it on a 30-minute, maybe look at it on a daily, figure out where your channel edges are, take a breath, and determine what your trading plan is going to be around that, and then trade. If you want to avoid all that madness and all that additional analysis, just let the market return to its normal bias and then buy a breakout over the top of a previous candle. That'll kind of keep you out of this. If the market starts selling off, you let it sell off. You don't worry about it. If it sells off enough and the 30-minute bias crosses, then you don't do anything and you're away from the market. I feel like it's a much calmer way of trading. Anyway, it's what it is. Probably spent too much time talking about that. Crude, same thing. We saw that big sell-off, as we did with gold. All of these are returning back to their normal bias, which is long. We've got a long bias on both of these. So we'll wait and see. Same exact process. Let the news session begin. Let's see what shakes out from that, what direction the market's going to take it. I would caution you on trading right at the open. Let the market shake out a little bit. Let some, they call that amateur hour. Let that kind of pass and then see what direction the market's actually going to go. And then we can look to see if we get that return back to the normal bias and can trade from there. Crude did start trading minis this week. So there is mini crude. It's been, the barrier to getting into crude has been a little bit like if you've got a small account, if you're starting out with a, $2,000, $3,000, $4,000 account, crude hasn't been really accessible to you just because of margin requirements and whatnot. So mini crude or micro crude rather has started this week. There's not really any data behind it. So if you throw that on a 4-hour, you're going to see these crazy 4-hour biases that are out of alignment with what you've seen here on regular, crude E-minis, right? So before you start trading that, you might either A, do your analysis on regular crude and make your trading decisions on the micros, or give it a few weeks and let it get some history before you start putting it on a chart and trying to apply your analysis to it. So that is what it is. Okay, so I think we've hit everything I wanted to talk about. Today, big message, just there's a lot of momentum in the market on that news. Don't jump in front of the moving bus or the moving train or whatever you want to call it, right? It's a big object with a lot of momentum behind it. Don't try to call the tops or the bottoms. Let the market do what the market's going to do. You've got a market bias. If it snaps back to that market bias, look at breakouts from previously closed lower highs and ride that wave back to where it was. If it keeps moving down, let it move down. Don't try to jump in front of it. And if your emotion is the only thing that's driving your trading decision, maybe take stock of that and stay away from the market too. All right. So that's it for now. Have a great day.